Hi, everybody. Happy Friday. There was really nothing in the hopper as far as other content. There was one other post, which, with due respect to the author, was kind of just an advertisement. So I thought I didn't want to leave a image of a bar up for 20 hours and have thousands of comments accumulate on that. I thought it'd be time to make a little video post. I remember I didn't mention clicking on a few ads last time. If you feel like it, it's always appreciated. If you have anything of interest that you see on the site, that's how I make my nickels and dimes off this effort. And obviously here we have King Tutankhamun displayed here as an homage to what's going on. It's pretty pathetic that we have to rely on international mayhem to get the market to move down at all, but that's what it's come to. Let's look at a few charts. This is going to be a short video. I just wanted just a few thoughts here. The euro dollar. This is important. This is an important graph. There's more room to the upside here potentially, which not that anybody's asking, but I'd rather not see. The weaker this is, the better off we equity bears will be. Even with this kind of collapse, which took place from December 1st to May 31st, which looks like the world was ending, it took all of that just to make some of that fun in May take place. There was really just a few weeks in this swoon that equity bears got to kind of party. But that's the kind of collapse that needs to take place to provide bears any hope in this environment we're in. Now, as far as the indexes go, here's the NASDAQ 100. This one's interesting. There are certainly plenty of folks who would look at what's happening here as a breakout, and there are lots who, and I strongly disagree, would look at this pattern here and say, oh, look, an inverted head and shoulders. The target is, let's see, the low's about 1,000. The next up here at 2,200. Gosh, we're heading up to 3,300 on this thing. Look, just because you've got this extraordinarily tall so-called inverted head and shoulders, it doesn't work that way. If this kind of pattern were much more shallow and at the bottom of a long bear market, that would be exciting. It just doesn't. No. Now, what would be cool here, because this is a breakout, some kind of breakout, is if the breakout fails, because there's nothing I love more than seeing a failed breakout. Because it just disappoints everybody, and I kind of live off that stuff. So if it fails below this line, that kind of takes their candy away. And if it fails below this trend line, which let's not get ahead of ourselves, but if it were to do that, then my gosh, you'll find me a much more animated person at that point. But we have to take things a day at a time here, and let's keep in mind that it's a ways off. Now, as far as the S&P 500. This really caught my eye today because a while back I drew this horizontal line and I very specifically tagged it to this day here, September 2, 2008. This was kind of the very, very, very last gasp of the prior bull before things really got fun back in September 2, 2008. This was the very, very highest point before that started. And Honest Engine, I put that up a while ago, this horizontal line, and I was shocked today to see that it came within just hundredths of a point of touching that line. So as exciting as today was ever so briefly a new recovery high before it became the biggest down day since August 11 or whatever. So very interesting kind of two faces to today, the whole Janus complex on today. Not surprisingly, the VIX went crazy because we were down here in like teeny bopper territory and we're back up into the 20s, just barely today. A 24% increase in the VIX, very interesting. And this kind of is what we would love to see. Look how fast that happens. Boy, it makes the blood rush, doesn't it? The other thing I wanted to show was a couple of the E-minis. NASDAQ is interesting because it actually didn't even match its Jan 19 top here. And I was really interested in this one because as we came into this week, this little pattern did have me worried. The measured move on this was about 23.39, and it sure did make some progress up there, almost uninterrupted. And then this was yesterday. Things kind of got wiggly. After that Microsoft craziness and Amazon and everything, and then so it wiped out many, many days worth of Bull's work in a few hours. Always gives me a grin. ESH1, this is the S&P, same deal. Many, many, many days of bullish construction, and then the bears do their dirty work, quick and dirty, real fast. But this market's all about disappointing the bears in particular, and I am always prepared for that. We'll see if that takes place again, because we've certainly had our fair share of this is it. No, it's not it. So it'll be a while before I really get kind of exuberant about things. I mean, as I've seen in the comment section, one day does not a trend make, and one day does not a trend break. And this all this stuff is kind of tough to beat down. But I am starting to see stocks here and there, like this one, do really interesting things with respect to percentage-wise falling a really hearty amount. And I'm still kind of all about individual issues right now. I've got lots and lots of little bitty shorts. I do have a few medium-ish sized positions right now. If I can remember them, I'll just cheat right here and look on my watch list. So currently I am short, these are the largest ones, DBA, GDX, a perpetual favorite, GLD, SPY, and finally XLU. So those are kind of my, not even really big boys, but medium boys right now. I'm really not pushing the pedal to the metal because I've been hurt so many times. All right, that's it. I'm going to go have a weekend. May God bless and see you always. Thank you. Bye.